My first reaction, like anyone else's, and hello ladies and gentlemen, is completely gobsmacked. You look, you do all of the machinations, you look through what's gone on before, what people are saying, and you get an idea of the consensus. And then you get something like this, which is actually more than one standard deviation away. It's quite a significant blow, and you have to think again, put effort, throw your textbooks away, get rid of the pundits, and actually see what the market is doing, because what this is about today is what people were expecting, the positions they were taking beforehand and actually taking now, and see how the market reacts in the next 30 minutes to an hour to see how the market digests it. In other words, if you look at the bond market on a number like 38,000, it's going to be up in the gods. And the question is, normally on NFP, and this is something I might show later if I have the opportunity, to show how the market typically reacts. It reacts typically for the first 30 minutes, comes the New York Stock Exchange open, it goes back generally to similar levels. Then for the next 12 hours or so, it will do whatever it's going to do on the basis of that NFP, and then that will fade into the next week. So it's never really, very rarely do you see a gigantic move. That's when it's within reasonable expectations. 38,000 is completely outside reasonable expectations. So certainly it doesn't, people are wondering would there be a June hike, and people are saying there's 35% expecting a June hike. Brexit would get in the way, so it won't be July, it would be July. Now we're actually talking, you forget July, because this number is so astounding. I haven't actually seen the details necessarily why. It's beyond Verizon, it's beyond bad weather. This actually puts a real question mark on any possibility of an interest rate hike for the next 3 to 6 months, until we get the numbers that prove otherwise.
All right, let's just try and move. I've got a lot of questions with this. Right, so we've got a shock number. Well, there's two things. It's Friday morning, 9 o'clock. You're looking at the markets; they're ticking away. It's all quite boring and quiet. For any of the people here, was there something in the market already that suggested, the dollar's weakened, gold's gone through the roof, indices down, I presume. Was there anything suggesting that? And that's the first question. And the second question is, does it matter? Because you just see the, 1:30, you see the data come out, and you just, that's such an obvious number. We're just going to go, even if you miss the initial move, you've got to move now for what, the next week, the next month, Philip?
Well, hi all again. We were just talking about, the room is a little bit busier now, but we were talking about this earlier. I do not front run the news, so I have everything closed from the intraday point of view ahead of these news. And we were talking about how negative news can actually be seen as a positive for the market. Sometimes the markets can rally lately on the bad news, and markets can sell off on the good news as well. So the prudent thing would be go flat into the number, assess the initial reaction of the market participants to whatever the number is, and then decide what to do in your chosen time frame. So if you have a longer term time frame, then this appears to be quite bearish, because number is considerably lower than anybody else was expecting it, and it does set the expectation that we could see a continuation of this a downtrend, and the recent oversold bounce back in indices in particular that we saw over the past week or so wasn't natural. I would describe it as a short squeeze type action, because we had this topping head and shoulder pattern in S&P and Dow Jones, and everybody was talking about it and so on. And then the markets kind of rallied off that level, and then they were just picking up the stops, and markets were rallying on a falling volume. That's not healthy breakout. That's not a healthy breakout. So at some point, if we find resistance at 2,100, 2,104 and a market sell-off, and we have a trigger now, and this continuation of downtrend carries on, because we have huge amounts of data coming towards us next week and very soon. So we have FOMC, we have Bank of Japan, we have Brexit. Markets do not normally rally. They do not normally behave bullishly ahead of so much uncertainty.